Good morning, traders. It's Wednesday, February the 19th. Taking a look at the charts, we've got the SP 500. Yesterday, we saw the equities market sell down. It was down quite a bit yesterday, ended up recovering back up. We're pretty close to the 5-day moving average. Today, we're trading back at the 5-day moving average. Equities are actually up about 1/3% this morning, and they continue to hold their ground. This wick that we saw yesterday, this lower wick and then recovery, is a strong sign. Typically, that's a sign that the market's going to move higher. It's kind of a short-term reversal sign, a lot like this one over here, where the price sells down and then the next day it opens up and starts to move higher. So hopefully we'll see this extend higher. Today should be another good day for our portfolio. Equities are up, gold, silver are up, and the miners are up. So let's take a look over at the miners. You can see here right now they're trading. You can see this was yesterday's close, a very strong day for GDXJ, which we are long. Today we're seeing it move up even more in pre-market trading. We're right up at these previous highs. So this is a really significant area across here. We just draw a horizontal line across here. You can see the market's never closed. It closed once above here. Each time it got close, we've seen a big sell-off. And the last time we saw it rally up here, held for one day, and then we saw it get completely rejected. So this is a really critical point. Yesterday, everyone was feeling really good about the metals market, and so was I. We'll see if this can hold, though. We got to remember, a 1 or 2 day pop in the market isn't a new trend. We need to see if this is going to hold, and it's got to hold above this blue line for a couple days, and we really want to see it break to new highs. So we'll see how things go, but overall, this pattern here, bull flag to a cup and a handle formation, this is another bull flag pointing to higher prices. This could be the start of something really big, and it's really exciting to see this start to unfold here. If we take a look over at gold itself, I'm just going to make sure I'm on the daily here. Gold up again today, up about 0.4%, so it's starting to go up and test these highs. Just look at this level that we're threatening here, this previous high right there. We tagged it in pre-market trading. It's pulled back a little bit. We'll see if we can muscle our way up and through there and start to take off. But overall, gold, or the precious metal sector, seems to be coming to life. Everything is testing critical resistance areas, and we'll see if those levels can be broken. Silver up another 1% today, had a big day yesterday. Again, all these levels are starting to break to the upside. Where we're breaking up. Here's one previous high, here is another previous high. Once you've broken two previous standout highs in the market, the trend is usually considered to be to the upside, and any pause or pullback can be bought because it should be expected to go higher. So overall, we're testing another resistance area right across here. So I wouldn't be surprised if we see the markets maybe trade sideways for a little bit, pull back, but overall they have very strong momentum at this point, and we could see this continue to muscle up or hold its value for a while and potentially go much higher. We are in position with the GDXJ, so we've got more or less the most leverage type of play without using a leveraged ETF. We've got the good asset class for taking advantage of this big potential breakout in the precious metals sector. If we go over to energies, natural gas down 1.2%, had a big short covering squeeze and pop yesterday. Again, this one broke two previous pivot highs. We had a high here, we had a high here, and we're now testing the 20-day moving average, which acts as a very significant downtrend resistance area. So we are fighting with a previous high. We've got the 20-day moving average. More or less we've broken, you could argue we've got an internal high and two external highs, so it's more or less muscled itself up to break three previous highs in the chart. And so if this consolidates or pauses here, this could be a great opportunity for it to really pop and start a big move. There is potential for it to go all the way back up to the 250, maybe even up to this green line, which is a long-term weekly chart resistance area that we've followed for a long time. If we go back on the weekly chart, let's just take a quick look. If you look at this weekly chart, you can see how significant this level has acted. It was acted as a support level. Once it was below it, it was stuck under it, and then we got above it. We bounced, bounce, 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 another bounce, and then we started to trade through it. and we started to trade through it again here, but this line in the sand is going to act as a really significant level that if it gets up there. 250 is more or less kind of like a whole number. There'll be a lot of people saying if it hits 250, get me out of that position. So more or less the target will be somewhere just below 250 before it runs into some pretty good overhead resistance. Between 250 and this green line will be a lot of sellers for natural gas. Last but not least, take a look at crude oil, up 1.6% this morning. Let's go back to the daily chart and zoom in a little bit. Today it's starting to break out of this box, out of this consolidation phase. We got this consolidation phase right through here. So yesterday it ended up having a fairly strong close, closing right up near that level. Today we're starting to see a pop and start to move up again. We talked about this yesterday, that if it does break out and start to move, the next level is going to be the 20-day in this blue line. This is the upside potential area. So more or less $55 somewhere in this area is where it should pop and squeeze really quick. The market always seems to have a way to make a strong move and negate half of the move generally before the masses can get in at regular trading hours. We'll see how crude oil moves, but overall the first key level will be this area up here for it to hit, and it is still in a downtrend at this point. We're struggling with a longer term downtrend, and this will be a resistance area that if it does pop and squeeze up there and we don't get into a long position, we'll be looking for some type of potential downward move back down to these lows and down to that $44 per barrel. So I do have more of a bias to the downside. The big trend is still down. This to me seems like it's an oversold bounce to the first area of resistance. The market will make a series of lower highs, and it should continue to make a series of lower lows, which 44 would be the next level to the downside. Anyways, that's it for this morning. I'll talk to you in a little bit. Oh, you know what? Let me just quickly take a look at bonds. We skipped bonds today. Bonds down about 1/4%. Yesterday they posted some nice gains. They couldn't hold this previous high and ended up closing just below there. Today we're seeing them pull back a little bit. Today money seems to be flowing more or less into precious metals and the equities market. Overall, we're going to be stuck in this little pennant formation. You can see where it started to break out yesterday. It's pulling back, and overall, we'll see if this consolidates, and it should still resolve to the upside. But overall, money is just going into equities in the precious metals sector today. So that money's usually got to come from somewhere, and it looks like it's coming out of bonds at this point. So we're seeing a little bit of a pullback there. Anyways, that's it for now. Talk to you in a bit. Bye-bye.